Hello everyone. In the last class, I explained about electronic cash ledger, and in today's class, I am going to teach you about electronic credit ledger. Now we will see what is electronic credit ledger. It is a virtual account maintained on the GST portal, means that is the account that is maintained on the GST portal, and it is a place where all your input tax credit is reflected. See, in the previous classes, I explained about GST set of rules. Please watch that class first and proceed with this one. And I will provide the link in the description box. So, electronic credit ledger, it is a place where all your input tax credit is reflected. Fine. I will tell in the simple terms, it is a record of taxes, means electronic credit ledger, it is a record of the taxes you have already paid on purchases. You have already paid on purchases, means at the time of purchase of goods from the supplier, you have to pay the taxes along with the purchase price. So, this tax which you can use to pay future GST liabilities, means when you sold the goods to the customer, you collect the tax from the customer. But that tax or the amount of tax that is not belong to you, you should pay to that amount to the government. But during purchase, you have already paid the tax. Again, you need not to pay the tax. Here, you can use the tax that is paid on purchase to pay the future GST liabilities, means to pay the tax that is collected on sale. I hope this is clear to you all. See here, input GST means what? That is paid on purchases. That is called as input GST. And output GST means what? That is collected on sales. Here input GST means you have paid the tax along with the purchase price, and output GST means you have collected the tax from the customer when you sold the goods to the customers. And here, see here, during purchase you have already paid the tax. And here you need not to pay the tax again to the government. Means you need not to pay the full amount to the government. Here you can use this input GST to set off against output GST. For example, output GST, that is rupees 10,000, means what? Collected on sale. And input GST rupees 6,000, that is paid on purchase. And net GST payable, that is 10,000 minus 6,000, that is rupees 4,000. Means here we have utilized input GST to set off against output GST. Means here we need not to pay the full amount of rupees 10,000. Because here already we have paid amount of rupees 6,000. So only rupees 4,000 we need to pay to the government. Fine. Now we will see how does it work, means how electronic credit ledger work. See, when you file your GST returns, the taxes you paid on purchases, when you file the GST returns, the taxes you paid on purchases. Paid on purchases means what? Input GST. Like CGST, SGST and IGST, they are get credited to your electronic credit ledger. Okay? Means when you paid the taxes during purchases, they are get credited to your electronic credit ledger. And next what happens? Later, when it's time to pay GST on your sales, means you have collected the tax from the customer that is not belong to you, that you should pay to the government. At that time, you can use this balance, means the tax that is paid on purchase, to offset your liability. That's only here I have explained. Fine. First, what we have to do, when you file your GST returns, that are get credited to your electronic credit ledger, and later when it's time to pay GST on your sales, you can use this balance to offset your liability. Okay, now next one, where to find it, means how to access the electronic credit ledger. First step is, first we have to log into the GST portal. That is the first step. And after that, go to Service tab and click on Ledgers and select Electronic Credit Ledger. First, log into the GST portal and go to Service tab, click on Ledgers and select Electronic Credit Ledger. And after that, what we have to do? Here you will find the details in Electronic Credit Ledger. You will find the details of your input tax credit and any debits and credits. This information you will get in the Electronic Credit Ledger. Fine. Now the last one important point, that is, here you can use input tax credit only for paying GST liabilities. It means what? Here you can use your input tax credit only for paying the GST liabilities and not for penalties and late fees. Means you should not utilize input tax credit for the to set off penalties or late fees. Means you can use input tax credit only for paying GST liabilities. Fine. Now I will explain this through one example. See here. ABC Traders, a GST registered business that purchases raw materials and sells finished goods. They purchase the raw materials, means at that time they have to pay the tax to the supplier, and sells finished goods means they have to collect the tax during sale from whom? From the customer. That tax that is not belong to them, they have to pay to the government. Okay. Now the details of the transaction. Input GST paid means on purchases. ABC Traders purchased raw materials worth rupees 1 lakh and GST paid on purchases, that is rupees 18,000, means totally they have to pay rupees 1,18,000 to the supplier. And next one, output GST collected when on sales. ABC Traders sold finished goods worth rupees 1,50,000. GST collected on sales, that is rupees 27,000. See, this 27,000 we should pay to the government. Means here we will collect the GST from the customers. Here we will pay the GST to the suppliers. Means here we have already paid rupees 18,000. Means we need not to pay to the government full amount of rupees 27,000. Here we can use this input GST to set off against output GST. Means here we have to pay to the government or net GST payable, that is rupees 9,000. Means 27,000 minus 18,000, that is rupees 9,000. Okay. Now we will solve the problem. Step 1. Input tax credit in electronic credit ledger. Rupees 18,000 GST paid on purchases. See here. GST paid on purchases rupees 18,000 is credited. That is credited to ABC Traders electronic credit ledger. That is the first step. And step 2, set off process. When filing the GST returns, ABC Traders can use rupees 18,000 input GST to offset the rupees 27,000 output GST liability. Means what? Here ABC Traders, they will utilize input GST to set off against output GST of rupees 27,000. Means here 27,000 minus 18,000, that is rupees 9,000. Means here we have utilized rupees 18,000. We need not to pay rupees 27,000 to the government. We have to pay only rupees 9,000 to the government, because here we have utilized input GST, that is paid on purchases. And step third, see, net GST payable. Output GST, that is rupees 27,000, means collected on sales, minus input GST rupees 18,000, means paid on purchases. So rupees 9,000 is net GST payable. So ABC traders will pay rupees 9,000 as net GST liability. Now we will see how it appears in the ledger. Transaction type: input GST credited, amount rupees 18,000 and balance rupees 18,000. And output GST debited. Here input GST credited, means paid on purchases, that is rupees 18,000. And output GST debited, means that is rupees 27,000, and balance rupees 9,000 we need to pay to the government. Means the ledger reflects that rupees 9,000 remains payable after utilizing the input tax credit. Fine. I hope this electronic credit ledger concept is clear to you all. If not, please leave a comment. Thank you.